Well, a very good morning to you all. If you're in London, it's a pleasure for us to be giving you this presentation. My name is Craig Martin. I'm the chairman at Dynam Capital, and Dynam Capital is the fund manager for Vietnam Holding. And I'm joined again today by my colleague Tam, a portfolio manager at Dynam Capital, at the coalface each day of the equity market in Vietnam. And after my introduction, Tam will take you through talking about the macro and some of the developments in the portfolio and the market. It's always an exciting time in Vietnam, and I'm sure we'll be able to touch on some of those exciting themes. And then at the end, we'll have a time for Q&A, questions and answers, which I'll be moderating. So don't be shy, feel free to drop questions in, and we'll try and get through all of those if we can. So without further ado, I'll take us through the start of our presentation. Next slide. Usual disclaimers apply. You can read this at your leisure or later. Next slide. So Vietnam Holding, for those who don't know us, we're listed on the main board of the London Stock Exchange. We're about £100 million, roughly, in market capitalization. We're a closed-end fund, but the fund is part of the FTSE All Share. The fund has an independent board who are very active in terms of managing the discounts to net asset value that are typical, perhaps, of closed-end funds in the UK. And they do that through a combination of share buybacks and also through an innovative annual redemption facility. We can touch on that later, but we've just closed the second of those. The first was last year, and that helped narrow the discount between the fund's net asset value, between the share price and the fund's net asset value. And our fund has the narrowest of the three discounts of the three London-listed funds. So we're a partner-owned business with a locally based team, which is necessary. You need to be on the ground to be looking at the opportunities and researching the opportunities very closely. Next year will be 20, or the fund will be 20. So we've got a 19-year track record and a track record of outperformance against the market, but also against other funds as well. And if you look back over the last 5 years, we've delivered around about a 20% per annum compound return, and that compares favorably with the index. So we've delivered roughly 500 basis points of alpha or outperformance to the index. Although I should caution, we're not an index fund, we're an active manager. We're looking for good opportunities, a concentrated portfolio to deliver that outperformance. We've typically got somewhere between 25 and 30 holdings in the portfolio, and all of these are listed companies in Vietnam. We don't use any gearing to deliver our returns. There's enough growth and opportunity in the Vietnamese equity market. We've been a long adherent to responsible investing, a signatory of the Principles for Responsible Investing since 2009, which was 3 years after those principles were first introduced. We were the first Vietnamese fund to adopt those principles. And recently, over the last 4 or 5 years, we've also been measuring our carbon footprint and educating our portfolio companies to do the same. Now, that's not just to be good and have a happy feeling about, our treading lightly on the planet. No, it's more about facing up to the realities of the issues around climate, but also for Vietnamese companies. They need to adapt and report so that they can succeed on the global stage, which many of the Vietnamese companies wish to aspire to. You'll hear through the presentation, and Tam will talk about what's happening on the macro. For us, the opportunities that fall out of the macro around industrialization as Vietnam modernizes its economy and continues to modernize its economy. You'll be hearing about the consumer and the domestic consumption market in Vietnam and urbanization. So we'll be talking about those themes, but we're a stock picker. We look for great companies that can compound their earnings, but typically they fall within those core themes. So we're not the index, we've got a strong active share, and we're able to navigate across the small, the medium, as well as the large cap opportunities in Vietnam. Next slide. We've been winning awards. Last year, we managed to collect a number of awards. We've been the winner of the Citywire Investment Trust Award for 2 years. We're shortlisted this year, but we've got some intense competition. So fingers crossed that we'll do well. But to be nominated is no mean feat either. And so we set out to do simple things well, and our track record speaks for itself. And we've also been delighted to pick up awards along the way on our journey of investing in Vietnam. Next slide. Well, Vietnam itself has also been on a long journey. And just the beginning of last month, early September, Vietnam celebrated 80 years of independence. And again, for those who are not familiar with Vietnam, there's a number of milestones. It hasn't been a smooth journey by any stretch of the imagination. But what stood out time and time again is Vietnam's resilience, Vietnam's adaptability. And you'll see on this, in the mid-1980s, there was something called Doi Moi, which is a process of reform. And reform drives results. And the reforms in the mid-1980s set Vietnam as a destination for foreign direct investment. Following the opening the doors, in the 90s, Vietnam started to attract lots of foreign direct investment, which continued through the noughties and following through the accession to WTO. And a lot of that investment was for manufacturing for export, and Vietnam has become an exporter to the world. Recently, this year, there's another revolution, another reform process, another Doi Moi. And this is why we've titled today's webinar Vietnam 2.0, because the Vietnam of tomorrow is not the Vietnam of today. And there's significant positive changes underfoot to really accelerate Vietnam's growth and its continued journey of results driven by significant reform. So there's a lot to look forward to. Next slide. So Vietnam today is a rising champion. It's a large population, 100 million people, in the crosshairs of Southeast Asia and North Asia. Still a young, digitally savvy population with a strong homogeneity to it. Population and a nation of people that want to succeed. They want to be better than their parents, and they want their kids to be better off than they are. And it's certainly on that trajectory. Very, very digitally savvy, and a lot of internet activity and access through some of the cheapest internet in the region, and the easiest and the cheapest to deploy for the people that lay the fiber optics. And that also helps underpin the digitalization through mobile devices, for the mobile banking opportunities, and for omni-channel retail. So for purchasing through the apps that perhaps you're familiar with, but also apps that are specific to Vietnam you wouldn't have heard of and wouldn't be using. And that digitalization is an increasing theme driving the growth in the economy. So Vietnam is benefited from that foreign direct investment. It's benefited from the export and the trade. And that's driven a very high historical level of GDP growth, per capita GDP. And that's flowed down to the population, who are getting increasingly wealthier. And the Vietnamese government want to see the people continuing to have high levels of wealth. And that translates both into savings, but also into consumption in the market. And yet, through all this growth and this economic development, the economy is in a stable position, a good growth, and yet inflation is not a concern. So as I mentioned earlier, the key investment themes that you want to be looking at through us into Vietnam would be around industrialization, the domestic consumer, the urbanization, as well as digitalization. But Vietnam 2.0 is not Vietnam 1.0. What are the catalysts that are going to drive that change? Well, there's programs to reform the domestic economy further, to upgrade to an emerging market proper status, which Tam will be touching on. And obviously there's good news this week on that. The rise and the focus of the government on the private sector and its role in financing the growth. And lastly, a couple of new initiatives, the longer term development of international financial centers in Vietnam, showing that the government sees the private sector and sees the capital markets as a key and a core engine for rapid economic growth and development. Next slide. So I'll hand over to my colleague Tan, who'll take you through the macro and then the equity market and how our portfolio is positioned. And then I'll come back on at the end to give you some key closing remarks, but also to take the questions and answers and moderate that session. So Tan, over to you.
Thank you, Craig, for the introduction. Yes, it's a very exciting time for me, like to share with you the reform 2.1 that Craig just mentioned, and we already see some very early results of the reform 2.0. Yeah. And the second thing is also very exciting and very good timing that Vietnam has been upgraded to the secondary emerging market by FTSE. It's a very small step, but it's showing that there's a lot of development. It's not just in terms of macroeconomic, but in terms of equity market development in Vietnam. Yeah. So next slide. Next slide. Yeah. In terms of reform, yeah. In the first half of this year, there's a lot of concern about the external risk, especially for the tariff risk. But until now, the risk is manageable. And we think that the growth driver of Vietnam, the export sectors, continue to be the key driver of Vietnam, despite a lot of uncertainties, despite a lot of volatilities. But Vietnam is still the hub, is still the destination for MNC to come to Vietnam to develop, to have their manufacturing facility here. It's very surprising even to me. Yeah, the GDP growth target of the government at the beginning of the year is 8%, and we think that is very ambitious. But until now, the GDP growth of Q3 of Vietnam is already more than 8%, and on the right track to achieve 8% GDP growth, just like the target by the government. And this is the result of a lot of work by the government in terms of also a lot of focus on domestic investment and consumption. Yeah, and we already see early results of the reform. Yes, as just Craig mentioned, in terms of resolve the bottleneck in the property sectors, reform in the financial sector, and also the cost of $5 billion to cut the numbers of provinces in Vietnam by half already have some results, because there's a lot of movement. We can see the improvement and efficiency in the administration work by the government. And for this year, the government continued to follow the easing and fiscal monetary policy to support the growth. Especially for domestic consumption. Maybe it's a very new international financial center. The government have been talking a lot about it, and we think that there's a lot of work to be done to achieve the target, maybe next 5 years. But is it the mindset? Is it the mindset by the government, like to find a new driver for Vietnam in the next decade? And I think that is a game changer for Vietnam in the next decade. Next slide. As I mentioned, export and import growth of Vietnam literally not impacted by the tariff, and even this is very strong in September, more than 20%. And for this year, we still expect that the export growth of Vietnam to be around 12 to 15%. And the trade surplus of Vietnam is still very strong, nearly $17 million. Yeah, next slide. In terms of products and export market, we still see the balanced, sustainable growth of the export, and in terms of market, in terms of products, key export product of Vietnam, including computers, phones, machinery, still have very strong growth, and we see the very balanced export growth in key export market of Vietnam. Yeah. Next slide. Yeah, and I think that public investment is really critical for Vietnam for this year and in the next 5 years, the next term. At the beginning of the year, they set a target of 36 billion US dollars, to very ambitious for me. But now they already achieve about half of the target, and we think that they can achieve about 90 to 95% of the target, which is very encouraging, and is the result of the reform that we just mentioned. And next year, this is an example. Next year, the new international airport, the Long Thanh airport, will be put into operation in the first half of next year, which is ahead of the schedule, about 6 months. And we think that a lot of infrastructure around that to connect Ho Chi Minh City, the CBD, to the Long Thanh airport, to the new economic hub like in Mekong Delta, and the high-speed rail network to connect the south to the north, to be accelerated with the strong commitment by the government to disburse the money. Yeah. So, and this will be the strong foundation for the target of Vietnam to have the GDP growth of more than 8%. They're not just 8%, they are talking about the target of 10% for next year. We think it's ambition, but we will see. Yeah. But my observation is the ambition by the government is really encouraging. Next slide. Yes, this is for macro. And so what about the equity market? And we think it's very exciting in the last quarter. Next slide. And yes, the good news, just this morning, that Vietnam has been upgraded by FTSE Russell to a secondary emerging market. What we think is a very small step for the reform of the financial market of Vietnam. There's a lot of work to be done, but it shows that we have been done a lot of good progresses, and is it a commitment by the government to do more reform. MSCI will be more important, but we see with the what we have done, what the government has just done, we think that the target will be achieved in the next few years, and the target will be about 28 to 30, and all the way to achieve that target. I think that there are a lot of exciting story to tell to you. Next slide. Yes, and with the outlook of the macro, with the risk has been reduced, and the equity market also performed so well. In the last quarter, the market has been up a lot. Yeah, we can see from the chart. And with that outlook, the equity market also attract more investors, both local and even foreign investors. When we talk about foreign investors, even though there's an outflow like in other ASEAN market, but we see that the liquidity of foreign investors in Vietnam has been up like more than 4 times. And now they are trading around 100 to 200 million US dollar per day. And the rest is for local investors, about 1 billion to 1.4 billion US dollar per day, which is, and Vietnam has become the #1 liquid market in Southeast Asia. And for this year, we still think that the fundamentals is still intact. It's not just the exciting assignment by the market for the risk reduced, but also because of the fundamental. And we forecast the EPS growth for this year to be around 20%, and next year about the similar numbers, 20%. Next slide. Yes, and now back to the portfolios. I would like to talk about our approach, what we have changed, and also the current status of the portfolio. Next slide. Yes, we have been gone through a number of cycles for the last nearly 20 years, but the approach is still the same. Yeah, we apply the fundamental long-term approach, and we combine the top-down and bottom-up analysis for the portfolio. And the key secret for our to generate alpha is the long-term approach and the disciplined portfolio construction process that can make us like gone through the down cycle and also outperform in the up cycle. Next slide. Yes, for the investment teams, it's quite the same for the last few years. We modify a bit, but the key investment theme for us is still quite the same because we think that the key growth driver in Vietnam, including domestic consumption, urbanization, and industrialization, is still intact. Yeah, even though with the tariff risk, but we think that it is still very strong and still the key growth driver of Vietnam. For the banks, we think that the banks and the financial sectors would benefit from the mega trend. So we add here a new, but not really new, but we just modify a bit our key investment themes, but still the same. And we think that the 4 key investment theme will drive the portfolio in the next few years. Next slide. Yeah, as I just mentioned, with the long-term approach, and then the key themes we construct the portfolios as we show here, and now the banking sectors around 34% of the portfolio at the end of September. To prepare for the redemption, Craig can mention later. We prepare the cash for our investors, so the cash level is was about 12%. Yeah, next slide. Yes, with the very strong rally, the strong performance in the last quarter, but according to our forecast, the portfolio, the index and the market is still trading at a very attractive valuation for the long-term growth, especially for the EPS growth of 20% for this year and next year. And with the outlook of the GDP growth of more than 8%, not say 10%. Yeah. Next slide. Yeah, I would like to hand over to Craig.
Thank you very much, Sam. Thank you for walking us through the macro and the equity market and the portfolio. So as you can see, our journey has been a very fruitful journey, along with Vietnam's fruitful journey over many years. And over the last 5 years, we've been able to particularly demonstrate clear outperformance against the market, but also against our peers. So just what we don't say anything bad about our peers, they do great things as well, but there's clear outperformance. And so why is that? Well, we're very nimble. People say perhaps we're small. So Vail is probably 12 times our size, and VOF, which is also listed in London, is probably 6 times our size. But we're nimble, and as Tan has alluded to, we're able to nimbly construct our portfolio across our good top themes, but really finding good opportunities, good companies, and being able to invest in the mid caps, as well as seeing them grow and develop into the large caps and hold them as large caps, as well as investing in large caps. So we're nimble across the portfolio size. Obviously, the chart here shows something happened in April. I think we all know what that was, when the cold winds blew across the grass of the Rose Garden, which I think has now been concreted over. But as Tan said earlier on, the Vietnamese domestic market has largely shrugged off and recovered from those chill winds in April, and is looking expectantly to the growth coming forward, and partly by the reforms, and partly perhaps in anticipation of the upgrade to the emerging market, which happened yesterday. And so we're delighted through that. So for Vietnam Holding, we're nimble, focused, with a clear strategy to deliver good returns, growth at a reasonable price to our investors. And we're looking at the long term, trying to find these businesses that can compound their earnings. and deliver that return to our investors. The other thing perhaps that differentiates us is that, going back to the very beginning, where we have an independent board that's very focused on the discount to net asset value. So 2 years ago, the board implemented, with shareholder approval, a very innovative annual redemption feature. This wasn't under pressure from shareholders or people. This was thinking ahead to what is right for shareholders and how to address the discounts to NAV. So the company implemented last year the first annual redemption, and that means that once a year, investors, as long as you've been on the register for, I think it's at least 6 months, you can tender shares at net asset value. And so the first was done last year, and I think it's about 12% was redeemed. And then this year, the interim announcement was for about 17.8% redeemed. There'll be formal announcements around the final numbers in the probably next 24 hours or so, as the board complete that process to meet that redemption. So we're a fund that's active, but a fund that's also very clearly plugged into what our investors and our shareholders expect and want to see. So we're delighted with our outperformance, and we're happy to take some questions. Next slide. We're also very happy for you to fire questions to us. Tan's email was in the intro for the webinar, and myself and our other colleague Tin as well. We're always open to hear from investors. We try and be very transparent, and obviously use webinars as well to get a broader opportunity to talk to our investors. And so let's do that now. We'll go to a period of Q&A. We've got quite a few questions that have come in. I'll moderate these, and I'll give the difficult ones to Tan, and I'll take these ones. No, we'll both talk to what is on investors' minds. And I think if we could perhaps just go back to that last slide, and we'll talk to the first question that's come through, which is great outperformance over 20 years, long-term outperformance against our peers and our markets. But this year to date, we've underperformed the index. We've underperformed the Vietnam All-Share Index. Although we've delivered strong returns, the Vietnam All-Share Index has delivered even stronger returns. So the question is, from a long-term investor, a couple of long-term investors, you would appreciate a comment on that underperformance during the year to date. So Tan, do you want to just take that first?
Yeah, so year to date, we underperformed the market, and the key reason for that is because of a lot of changes in the market, including the introduction of AI, and a lot of AI, in the introduction of the reform in Vietnam and the results of the reform, and also the volatility impacts on the market due to the tariff. There's a lot of things, but the key question, the key thing is the outperformance of Vingroup. Yeah, so Vingroup is one of the biggest conglomerate in Vietnam. Yeah, and it's the outperformance of Vingroup was attributable to the very excitement by the local investor to jump in and to go ahead of a lot of support by the government to the group. We have a small position in one of the subsidiary, which is the leading real estate company of Vingroup, but we underweighted. We have some skepticism around the venture of Vingroup to the EV sector. So that's the reason why we underweighted Vingroup. Yeah, so that's the key reason.
Yeah, thank you, Tan. Just to add to that, so we're an active investor. We go by conviction levels. We build up our confidence in companies. We're not trying to invest in every company in Vietnam, nor in every sector. So 25 to maybe 30 companies. Companies we've known very well and we've tracked very closely, and some we don't invest in. And as Tan said, it happens that one company that's a large part of the index is up probably more than 300% this year, and it's not a portfolio company that we have, and therefore, demonstrate some underperformance this year. But we're a long-term investor, and if you look back at our track record, it's a track record of outperformance, of strong outperformance. So I would say don't judge us on 1 year against an index. We're confident that we can find good companies and deliver these strong compounding returns. And our 5-year annualized return is about 20%. So 500 basis points above the index. And so that's the kind of space that we like to be operating in. We're not going to try and replicate the index, trying to find good companies. And we'll miss some, but some of those may be kind of short-term accelerations. And sometimes people get ahead of the realities around that. There's another couple of questions, the same question, but from a number of people. What do we think the changes will be to the Vietnamese equity market now that FTSE Russell has indicated that next year it will be part of the secondary emerging market, whereas before it was the frontier market? Tan, do you want to talk first to that? Then I can add in as well.
Yes, I think that the first immediate impact is Vietnam will be in the radar of more global funds, and we estimate that the about $1 to $2 billion US will be invested in Vietnam by passive fund. But I think it's for the long term. There will be more push, more pressure for the government to do more reform, and I think this is the key. And the second thing is, I think that is for the longer term, the government will see that is good for Vietnam for reform, for to be more transparent for global investors, and would be support Vietnam a lot. And I think it will be the push for more reform we will see in the future.
Yeah, thanks, Tan. So I agree. The reforms generate results, and actually the steps taken to meet the criteria for FTSE Russell, which is, I think, a company of the London Stock Exchange Group, Vietnam had been watch listed for 7 years, actually, as a frontier market, and had been a large part of the frontier index. So every frontier investor would have some allocation to Vietnam. So we're now in a new regime, and as we move into the emerging market, the secondary emerging market, as Tan said, there'll be the initial effects may be the kind of allocators from perhaps the passive funds. But I think more importantly, those reforms will get the interest of some of the large active investors as well. Perhaps people that have been sitting on the wings looking to see, is the government true with its commitment to a level playing field? Is it true with its commitment to the financial sector and the private sector within that? And so I think this is a very strong kind of way marker on the journey that Vietnam's on. And the government's already started to implement the steps to address what MSCI see as the impediments. That takes longer to address all of those things, but it shows that the government and the Ministry of Finance are very keenly watching what are the demands of the foreign investors and what they can do to position the equity market more favorably for those investors. And perhaps one other consequence we might see is a re-rating of the stock market. The stock market's not expensive. And also, as that re-rates, that will attract potentially the interest of local entrepreneurs to do IPOs. We haven't seen sizable IPOs for a number of years. And just this quarter, we've got maybe 3 or 4, haven't we, Tan, of potential IPOs and a list of potential IPOs for next year as well. And so I think that's also a mark of confidence in the domestic equity market, which has been affirmed and strengthened by the recognition and the moving to secondary emerging market for next year, subject to a review, as is normal in March. And I think that also then encourages entrepreneurs that maybe the market can reward them for their hard work with a reasonable valuation should they bring their private company to the public markets. And that's been interesting in the past. A number of our top holdings are businesses that were private businesses. They were backed by private equity in Vietnam. They learned the lessons of disciplined investment process and reporting by the numbers and changing the CEOs if needed and aligning along responsible investing guidelines that those private equity investors put into place. And then those companies came to IPO, maybe more than a decade ago for most of those. And those have been strong performers. So we're excited to see what the new batch of IPOs might bring for the end of this year and into 2026. We've got a question from a couple of people who have focused closely on our portfolio for a number of years. It's good to see. Last year, our number one position was FPT. FPT is a digital champion in Vietnam in software outsourcing, digital operations, and education. And now, if you look at our top 10, it's Mobile World, which is also a strong champion, an omni-channel retail champion that we've known and worked with for many, many years. And the question is, where's FPT gone? So it's not in our top 10. So Tan, do we not like FPT? Why is FPT not in our top 10 at the moment?
Yeah, we still like FPT because it's going to deliver a very good return for us for the last few years. Yeah, we have multiple return. But for this year, we forecast the EPS growth of FPT is still around 15 to 17% compared to last year, which is still very strong. However, so deep into the changes in the AI sectors recently, we have some skepticism around that because the trend can be negative for FPT for not. I'm so sure about that, but it can be negative for FPT in the short term because of they have to compete with the AI tools, yeah, in terms of software outsourcing. And we have seen that some early signal that the sales growth in the overseas market has been reduced a bit, especially in the US market, partly because of the lower investment because of the tariff risk. So that's the reason why we reduce FPT out of our top 10. Yeah.
So as Tan said, it's still a company we like, we admire the management and the business. Still in the portfolio, it's just not in the top 10. In our portfolio of 25 to 30 companies, they are our active portfolio. We've probably got another 25 to 30 companies in the wings. Some of those are businesses we've been tracking for many, many years. Some have been portfolio companies that we've taken profit from and they've moved into our kind of watch list. And then when the time is right, that we brought them back in. So Mobile World wasn't in our top 10 for a while. It had been previously, it now is. It's now our top position because it's been showing great margin improvement and really firing on all cylinders. We have the challenge of a closed-end fund, which is to have a good company into the portfolio. We need to sell something as well. So we do take profit when it's due, and we are nimble around the opportunities. So to back a good company, we need to sell a good company at times as well. So that's why the portfolio is different, perhaps, to as it looked last year. So we don't rest on our laurels. And each company regularly, each week when we're going through our portfolio, you have to justify, where it sits in the portfolio and our conviction around it. So I'm sure FPT will continue to be a champion, and in the future it may be back in the top 10. But for the moment, Mobile World is our number one position in the portfolio, followed by some of the banks that Tan mentioned. There's a number of great banks in Vietnam, and many of these are really grasping and using digitalization to their advantage in terms of their customer reach and their efficiency and their margin. And AI can cut both ways. And as Tan said, for companies in the software outsourcing world, we've seen this also in other markets, in India as well, where perhaps you don't need so many engineers at one time because people are looking to implement AI tools. But it's a changing world, and we keep a very close eye on it. There's another question about the redemption. So as I mentioned, the annual redemption. So during the course of this month, we'll be returning cash from the portfolio to those investors that redeemed. And to do that, we sell shares in the portfolio and return the cash. And there's a question, is there a danger of becoming too small and the fund becoming unviable? Well, not at these levels. No, we've been a niche sized and nimble player for a number of years, but we have returned a lot of capital to investors over the 20-year life of the fund. I think in the last 5 years, we've returned close to $170 million to investors through share buybacks, through annual redemption tenders over the last 5 years. And yet, we're growing as well through the NAV as our portfolio grows as well. So it's not an issue for us. Obviously, one thing we keep a close eye on is total expense ratios around that. But our size means that we can also get excited and put the resources into the smaller, medium-sized opportunities. And let's not forget FPT, which is a digital champion with $5 billion roughly market capitalization. That used to be a small, medium company of maybe $500 million when we first invested. And a number of our positions that we're meaningfully engaged with and are right-sized for us that are in that small, medium size, if they compound their earnings at 20% per annum over a period of time, they become large cap as well. So we're able to navigate those. And there's no changes to the team because of the size that we're at. So we're nimble and we're right-sized for the market. And we hope to grow through seeing the net asset value increase. I think they're most of the questions that we've had through, and we appreciate the questions today. And if people have other questions subsequently, do feel free to reach out to us. We want to regularly engage. We produce monthly fact sheets. The fund's annual report was issued just the other week, which has a lot of information, market commentary, as well as a little bit more into our approach to ESG and responsible investing. And then over the course of the year, if we have timely reports and white papers on what we see as the interesting trends, we release those to the market either through RNS or through our mailing list or through our LinkedIn channels. So feel free to go to the website for that access to all that information through the library. Make sure you're on our mailing list to get information, and stay tuned for regular updates in the months and years ahead. So on behalf of Dynam Capital and Vietnam Holding, Tan and I would like to thank you for your attendance, and we wish you a very successful day, and keep safe and keep well. Thank you.